Hello and welcome to today's daily educational video here at Forex.Academy. I'm your host Robert Blackwell and have the pleasure to walk you through today's daily education. Before we do so, of course, please consult the following disclaimer. There is risk inherent trading the financial markets. On the content of today's particular education, we'll discuss trading psychology. So what is trading psychology? Well, what we want to do is focus on achieving a state of mind that fosters successful trading. Okay, that is the main priority as a successful trader. You want to put yourself in a position where your mindset is focused on developing that successful trading environment. Okay, now that means encompassing risk management into your trading, developing yourself in terms of the stop loss sizes that you'd like to take, and trying to take away as much of that emotion or human psychology that is involved in trading to make your trading much more reactive. Okay, so the webinar is all about looking at the issues that can impact your state of mind when trading. However, we keep hearing that successful trading is all about trade psychology. So let's discuss this in detail. In our opinion, it is definitely more important to trade with a strategy that works. Otherwise, your mindset or psychology is not going to be good. So if you're looking to use a strategy that is consistent, that is back-tested, that you know over 100 samples that it works over perhaps the Forex markets over so many trades, well, it has a level of consistency to that strategy. Now, how are you going to feel in terms of the confidence for trading and using that trading strategy? Of course, you're going to have a much higher level of confidence. You're going to have a much focused psychological state of mind in its effort to actually apply that strategy, and you're starting to achieve that state of mind where you're fostering that successful trading environment. Most retail traders have very poor trade psychology because of their poor trading strategy and not the other way around. So let me just reiterate that again. Most retail traders have very poor trade psychology because of, in fact, their poor trading strategy, not the other way around. So if you have a good trading strategy, of course, it's going to develop that level of confidence where you don't have to fear the markets all the time. You don't have to have that level of greed to trading the markets where you've taken a few losers and you're greedy for the next winner, and the emotions start to come in where you perhaps have an attitude to take more size or more risk on a particular trade. No, we want to focus on the successful implementation of a strategy to develop that discipline and consistency, and that is where we derive our confidence trading. So what we like to discuss in terms of developing a trading mindset, it's like attacking and defending, okay? Approaching the markets like this. Our approach to trading is to focus on your risk exposure first, then look to maximize profits, okay? So why not trade with very small risk? And then if the market moves in your favorite direction, perhaps if there's an opportunity to add a little more risk, to add a little more exposure to that trade in the same direction, well, you could of course do that, and then you can try and maximize profits. Don't always just jump into the markets with large trade size initially. We achieve this by adopting a certain mindset when trading, which is once you enter a trade, that's your attack, okay? It is then crucial to defend that trade in a structured and consistent manner, okay? So that is not only by placing a stop loss and hoping that the market doesn't pull back to your stop loss. If the market continues to go with you in that direction, perhaps move your stop loss, defend that position. If the market is looking to pull back against you, look to defend your profits there. So we want to continue to do that until we break even on a particular trade, therefore removing the risk exposure. So once we actually make a trade and the trade continues to move in that direction, perhaps we look to first of all break even on the trade by simply moving the stop loss to a defensive position, okay? Breaking even on the trade. But what that does effectively is mitigate all the risk of that particular trade. Then we focus, then our focus can shift to making as much money as you can in accordance to your trading strategy, okay? So once you're in a defensive position, then you can focus on maximizing profits. This type of approach will really improve your trade psychology, okay? That's the main focus point we're really making with this webinar, to really improve your trade psychology when you enter and exit these markets. If a market is not doing what is expected, then become very impatient and look to close that trade, okay? We look to cut losers short as quickly as possible. Now, you may have heard the old expression, try and run your winners and cut your losers short. That is a very valid expression in trading circles, okay? But do develop that level of, I suppose, a crucial eye to a trade that is not performing. That is a good rule of thumb to use when trading the markets. We know that some markets are quite volatile. If you buy a market, say for example, it moves up and it's just sitting there, it's not giving you any more profit, it's sitting there for the rest of the day perhaps. Perhaps when it comes to the market close, if the market's just sitting there, why would you hold that position overnight if it's not a perfectly technical trade and the market hasn't done what you've expected it to do? You can also look to just take profit on that trade, so you're not holding the position overnight for that added element of risk. Of course, holding positions overnight, and then if it continues to move the next day in that preferred direction, you can always get back in. Okay, so think about the psychology of risk management there. Think about when a market is not performing, how you can react. So to reiterate, once we break even on a trade, our mindset shifts to giving that trade room to develop without a view to maximize profit. Okay, so we are always focused on maximizing profits, but do develop that level of, I suppose, honesty with your trading. If the market's not doing what you want, you can of course use that discretion to exit. Of course, you're trying to run your winners, but I mean, be reasonable with your trading, guys. Be reasonable in your expectations with your profit, and of course, over the long run, in short, we lose small and look to win big. Okay, so we look to cut our losers small so they don't affect our capital, and obviously try and run the winners to outperform the market. So that's just a brief introduction to trade psychology, to how to actually look to manage those positions, and how to develop a strategy in sense with the mindset between attacking and defensive positions in the market, so that you're remaining a little more consistent and objective while trading these markets. So that finishes off our daily education, just discussing a little topic there on trading psychology. Thank you very much for joining us here at Forex Academy. We'll see you next time. Bye for now.